What's going on, my friends? Chris here. Want to bring you all an update today. Is something that I was just thinking about here. I haven't done a car side update with you in a long time, so I had some things that were on my mind. And what I want to do here on this channel, even more so than just looking at cryptocurrency or whatever, I want to take you on my trading journey so that you can learn how to trade yourself and that you can carry it into any market. I'd been previously trading oil, getting into the EV space, all different types, semiconductors. I've been able to trade those things while the cryptocurrency space has been moving sideways. And I think it's important to take these skills and use them in other markets as well. And that's what I want to do, is kind of help you. And what I wanted to talk about today were 5 things that I've learned in 5 years of trading. And I think these are really going to help you out, save you some money. They're going to make you some money. And I think this is the important stuff we need to talk about, especially as Bitcoin's moving sideways right now. I think we need to study as much as possible and learn as much as possible. So if you get some from this, don't forget to like, subscribe, hit that notification bell. Let me know what you got going on today. Awesome to be here with you. So guys, number 1 is stick to swing trading or position trading. And the reason why I say that is because day trading in the crypto space is most likely going to chew you up in commissions and slippage. And long-term holding and investing, I just don't think it's the best thing. And the reason for that, guys, I've lived through the 2018 bear market. I got in this space in 2017, and I've seen the entire market cycles up and down. And to me, when I have the knowledge of trading and can swing trade, I don't want to sit through 50 to 70% drawdowns. It doesn't make sense when I could just get back into them when I see that a recovery is taking place. I don't want to hold through that whole drawdown like I did in 2018. And many times, some of these coins will never come back. I still have coins, guys, like NEO was all hyped up in 2017. I got in NEO. I'm still holding it. Haven't touched it. Just a long-term investment. And it hasn't really went anywhere. So, you just don't want to just grab a project and say, I'm going to hold on to it for 10 years because anything can happen and it could just fall to the wayside. So I think swing trade and position trading are going to be the best for you in this space. Really learn how to do that and catch these big swings and trade the trends that last 3 to 6 months. So number 2, cut losses and learn how to lose. Growing up, I played baseball, basketball, football. I was in karate. I'm a very competitive person. I mean, if my 3.5-year-old son wants to go hard on some Fisher Price, we're going to play. I mean, that's just, I'm competitive, and that's why I love the market. But what I had to do was learn how to lose and not get into a position, have it go against me, and then just keep holding it as it goes down and down and down. Because not only are you waiting for it to come back up, you're losing money and you're also losing time. The time factor, when I could be going to a market that's moving, a momentum market that's moving, and trade with that capital, I don't want it tied up. So I've really focused on time as well. And is it worth holding this coin if it's just tying me up when I could be trading something else? So really learning how to cut losses, learning how to lose, and accept that, because in this game you're going to lose. And you have to keep your losses small and let your winners run. Number 3, risk management. So in my experience, guys, you'll read the books. I've read tons of books, and they always say risk only 1% of your capital. That's not realistic. I think in this space, you want to stick to around 10% of your capital for a trade and really be patient and go into that. If it's a perfect setup, you can risk more, always use your stop loss. But I think 10% to 20% per position that you're taking is kind of the sweet spot, because you could still have money to back that up if you get stopped out. You didn't lose a ton where some people are going all in, and that's, I think, a problem. I used to do that, just take one position at one point and hope for the best. But now I'll use laddering techniques, laddering in, out, break even stops, different stuff like that's going to help you. But really working on your risk management, taking smaller trades when things are moving sideways. If you are trading in that market, really look for those trends. Okay, so that's risk management. You got to know how to control your bankroll. Number 4, stay out of sideways markets. We were talking about, you want a trend, whether up or down. You want to be trading with the trend. Sideways markets are going to chop you up. A subscriber said it best. He said, what was it? It's like a death by 1,000 cuts. And that's essentially what it is, where you're going long, and then it looks like you're getting a pump, and then it'll come back down, kind of what we've been dealing with now, back and forth, back and forth. It looks like a huge bull move, then a bear move, and it just hits your stop losses, and it's just a mess. So in my opinion, stay out of sideways markets and really try to find that momentum. So this goes into the last one. Don't be afraid to trade momentum. Mostly I've been a crash buyer. I'll see those big crashes in oversold conditions, from the 1 day to the 4 hour, the 1 hour, the 15 minute, the 5 minute, and I'll play that bounce and sell into that strength. But what I've been doing recently, I will try to tap momentum markets. So I'll be trading and say it's on the 1 hour time frame or whatever. I'm looking for a nice strong move and I'm trying to ride that momentum up with a stop loss below it. And I'm trailing up my stop loss as the price is going up. So when you learn how to use these stop losses, it can really help you. And I used to kind of be afraid if something would pump, you say even 8% a day, I'd go, oh, I already missed the move. But what I've been doing now is realizing that if I play a tight stop loss with the momentum, if it truly is explosive, it's going to keep going higher. And if I get stopped out, then it's a little loss. It's not a big deal. And you look for the next opportunity. But when you catch those, it can really make a difference. And that's what I've been doing. I've been using stock scanners and things and just looking for the daily movers. And for me personally, guys, just right now, until crypto gets moving, trying to make gas money and everything else, food money with inflation, all crazy. I'm running my personal training business and doing this, but I'm just trying to scrape out what I can from these momentum markets, and I'll hop in on the 5-minute time frame, see an explosive move. I'll hop in with a tight stop loss, and I've been riding these up and just trying to pull out what I can in the matter of 10 to 25 minutes or whatever. And it has seemed to be doing pretty well during this time of sideways action. So, guys, these are some of the things. Don't be afraid of those momentum markets as long as you use that stop loss. That's the ticket for you. The stop loss, and then also moving it to that break even once you do get some room so that the position doesn't go against you. You never want a winner to turn into a loser. So these are some of the things, along with many other things that I've learned in the last 5 years, but I want to share these with you. If you get some from this, don't forget to like, subscribe, hit that notification bell. God bless you all.